Good Monday morning, 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, totally unacceptable. Oil jumps as President Trump rejects Iran's latest peace offer.
Moderna revives the biotech trade as officials race to contain the Hantavirus outbreak tied to a cruise ship.
And KKR injects $300 million into a struggling credit fund, raising fresh questions about the health of private credit markets.
The Hantavirus story, something none of us want to deal with this morning. We don't need that in today's news flow.
I mean, that's not going to turn into a global pandemic.
No, but I still don't want.
Right?
I still don't want it. I still don't want it. I'm over it. One of the positive stories the stocks are watching is Constellation Energies. They beat its estimates, Matt, up 1.6% in the pre-market, maintained its outlook. The AI windfall shows no signs of letting up. Everything AI is just a nice melt up is the wrong word. It's like everything is crashing up.
Right. I mean, well, the question is, does this drive a different kind of long-run growth standard? We'll talk to Mike Pyle about that later on. The rally in chip makers also not letting up. Intel, Micron, Qualcomm, all extending record gains this morning as retail traders pile in to the AI trade at the highest level. No concerns at all about deep submarines that Iran has apparently unleashed in the Strait of Hormuz. So we continue to see gains across AI outweighing concerns on the ongoing war.
Yeah, nothing matters anymore except AI. And let's discuss that with Bloomberg Tech co-host Caroline Hyde. Caroline, the run-up in semis has been breathtaking. Again, like I just said to Matt, it's a crash up, not a melt up right now.
60%, 66% so far this year on the SOX, the Semiconductor Index. It's up another record high. And just what seems to be galvanizing it is we're so intoxicated by the idea of AI once again and the infrastructure play. And this doesn't just benefit, yes, the semiconductors play. Qualcomm's going to be moving big today. We've seen extraordinary moves for Intel as it just garners yet more and more exuberance around whether or not it can fabricate chips as well as be making them more broadly for themselves and for the future of data centers, which is, of course, in the way in which AMD has been signaling. But we've also got this melt-up helping the rest of the world. Emerging market AI stocks, in particular, have done extraordinarily well. What we've seen over in Korea, what you've seen over in Taiwan. I mean, what's amazing is as much as we've seen record high after record high and just enormous jumps for SK Hynix, Samsung, because their earnings guidance and because the street thinks earnings is going to be powering so much higher, their overall P ratios are coming down. It's like new Nvidias every single day in the way in which these valuations blow up. But actually, it all seems quite rational in terms of an earnings perspective.
You know, we're getting headlines across the terminal on OpenAI deal. It's a private equity joint venture. They're also apparently going to buy a consulting firm called Tomorrow, which is spelled very wrong, but I guess that's what consulting firms do. They're going to partner with TPG, with Brookfield, in a new joint venture to deploy AI. And this is something that we've seen Anthropic doing a lot of, right? Getting their tools out there to these, I guess in this case, portfolio companies through, I guess, an aggregator is what a PE firm is, like an aggregator, right? Because it has all these portfolio companies. They don't have to go direct. Is it really changing the way we work, Caroline?
Well, the productivity is what people are all questioning. If you're looking over the ECB, actually, they're saying those that have adopted AI quickly have actually seen productivity gains of about 4%. So that's not an enormous amount. Lou, think about what's happening in terms of the labor market reading on Friday. Technology labor market has been in negative territory for 16 straight months, according to non-farm payrolls. Yes, the jobs data came in better than expected, but I'm afraid tech has been feeling the pain. You've seen company after company coming out saying that they're reducing their headcounts. Many would say that's AI washing when they're trying to say it's productivity gains. But you are seeing a lot of people signaling that productivity gains are coming. But it's not like 40% growth. It's a general 4% increases in productivity that's been adopted from AI. But when OpenAI, and you've seen it from Anthropic too, both of these frontier labs trying to get the tools into our hands. Many would say the reason productivity hasn't blown up is because it's about training, it's about reskilling, and it's about making sure that it's not just software developers who are getting ever more productive, but you and I and general white-collar work. So that's why you're seeing OpenAI doing this deal. That's why Anthropic has been doing this deal, to try and make sure that they've got people to work alongside to get the training, to get it into the wider economy. But still, the question marks remain. Is the amount that they're spending on AI infrastructure, which helps with these chip companies, actually going to benefit the real economy writ large.
I also want to know, do these companies get more access to compute? I mean, do they get cheaper inference costs? I remember the other week, Uber exceeded their entire year's budget of inference costs in just a couple months. Surely these companies don't want to be paying a lot for that. I wonder if they get any sweetener of a deal if they're part of this JV.
They're trying to find workarounds so that they don't have to deal with that. We have a great story on the Bloomberg this morning, and I think it's a Business Week story by Austin Carr about Mac Minis powering this boom in AI agents. And a lot of these early adopters are saying they had to deal with problems where all of a sudden they were getting like $100 bills every hour,
right? Yes.
Right? But they find ways to work around that. Excellent stuff.
Open claw life.
Yes, open claw life. Caroline Hyde, Bloomberg Tech co-anchor. Her program starts at 11 a.m. We continue here with Moderna. It's extending Friday's 12% gain as it works on a vaccine for the Hantavirus, an American and a French passenger linked to the Hondias cruise ship outbreak tested positive for the virus this weekend. Let's discuss the stakes with Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. And Sam, I said to Dani, like, this isn't going to become a global pandemic, right? It isn't, right?
No. But Matt, can I just first say, I wish I was covering AI stocks. You only call on me when there's misery and pain in the world. So I guess it goes with the territory of being a pharma analyst. So no, I think pandemic would be a very far stretch for this. You can never say no with 100% certainty. Viruses do mutate. And, look at this group of hantaviruses. This one's called Andes virus. It is the only one that transmits from human to human. So somehow it has gained that ability or has developed that ability. So it is possible that they would mutate. But this has happened before. We've had 1993, the Four Corners states. And in isolated cases, it happens. You deal with it with exactly what the world's doing now, quarantine. I'm not convinced you need a vaccine. Always good to be prepared, always good to be Moderna doing altruistic things. But from a commercial perspective, I'm not convinced.
Sam, is there something bigger for Moderna, though? Because it's rallying a lot. Is there some idea that it proves the efficacy or use case for the type of vaccines they have, the mRNA, that you can quickly turn them around to address any of these types of threats?
Yeah, I wish the governments in the world, particularly the US, also saw that, because otherwise we wouldn't have had all this backlash against mRNA vaccines or this push against vaccines. Vaccines are one of the best things that science has developed, and I've been saying the same thing over and over again. And these companies that have got the mRNA capability are the ones to focus on for pandemic preparedness, for situations where you may need something to turn on very quickly. Other vaccine technologies can't do that. But that's been the case for ages. So maybe some people have suddenly remembered that. But you would have thought, therefore, that BioNTech will have the same result or at least attraction. And GlaxoSmithKline is also in the, or GSK, sorry, is also in the mRNA vaccines, and so are some others. So I hope that's the case, but I'm just worried that this is a little reaction to perhaps retail-driven. I doubt this is driven by institutional investors.
Sam, I just got to throw this in because I feel bad we're not asking you about AI stuff, because you do kind of cover AI companies, no? Like all these pharmaceutical companies are using the technology, aren't they, and have been for some time?
They are, and I talked to quite a few people who lead some of the companies that are using AI in terms of the biotech-sized companies, and helping and working with pharma companies, in silico being one of them. There are a whole bunch of private companies that are doing it. Recursion's another one, that are helping speed drug development up. That productivity gain, which I remember you were just talking about with Caroline, that takes a little bit more time to come, because a lot of that comes through time savings in the drug development process. But we need a few years to see the fruit of that.
See, Sam, you do have good stories, and we ask you about them. I promise. Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. All right, let's do a hard pivot into a different topic this morning. Brent moving higher. President Trump rejected Iran's response to his latest peace proposal, calling it totally unacceptable in a Truth Post social yesterday. Now Iran says it has submarines deployed in the Strait of Hormuz. For more, Bloomberg government's senior White House reporter Mika Soliner joins us now. Mika, let's start with the latest on the submarine threat in the Strait of Hormuz. It doesn't seem to have too big of a reaction. A viewer wrote in basically to say they don't have the same kinds of deep sea submarines that you'd see from China or from Russia with nuclear threats. So what is the threat level at this point?
Yeah, I mean, there's still a lot of tension here, and seems to be no framework that has, concluded with both sides in terms of how to actually end this war. But we are seeing escalation from Iran. I know right now the president has argued that this is a time of peace, but he's also issued new threats. And of course, this comes on the heels of the president's visit with Xi Jinping in China. And so he's going into that with weakened leverage. He's going to have to really get some reassurances from China to help reopen the strait, as well as make sure that they're not arming Iran in the end.
All right, Mika, thanks very much. I just was looking up. Apparently, the deepest point in the Strait of Hormuz is only around 90 to 100 meters. So I don't think they really need very deep roaming submarines.
Sure, but the technology is not as advanced, and they don't have as many of them. So
I feel like you could take a swatch down that far. Anyway, check on markets right now. Obviously, markets are less concerned with what's going on in Iran and more interested in what's happening with AI. You can see that although futures are off 0.1%, S&P futures are trading at 74.11. So, of course, we hit all new record highs on Friday, and we continue to ratchet higher. I think there have been 6 weeks in a row of gains on the S&P and the NASDAQ. Brent crude right now trading up, but still less than $104 at 103.09. Let's look at some of the individual movers on our radar this morning. The world's largest gold producer, Barrick, beating earnings on the top and bottom line. It reaffirmed its outlook and approved a $3 billion stock buyback.
And then there was Circle. First quarter revenue increased 20%. The amount of its stablecoin in circulation jumped nearly 30%. Net income, though, did decline due to volatility.
Optics company Lumentum is joining the NASDAQ 100 next week, replacing CoStar Group as that latter has lost 2/3 of its value since last year's peak.
Coming up, KKR injecting $300 million into a struggling credit fund. We'll have more on the continuation of the BDC woes after this break right here on Bloomberg Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. SoftBank's Masayoshi Son is eyeing a massive AI data center project in France after talks with President Emmanuel Macron. The multi-billion-dollar unveiling could come in the next few weeks. Son has floated the idea of putting as much as $100 billion into the country. NBC is turning Wordle into a primetime game show. Savannah Guthrie will host with Jimmy Fallon producing and the New York Times as a partner. The show debuts next year, bringing the viral 5-letter puzzle to television as the New York Times expands into games. I mean, the New York Times really has already expanded.
It is a gaming. It's a games company.
That's a done story, and I don't even know if it's viral anymore. It definitely was. KKR is injecting $300 million into a struggling credit fund hit by rising losses and more unpaid loans. The firm will buy shares, add preferred equity, and waive fees to boost returns and support investor payouts. And the company's also going to do a $300 billion share buyback, right? So
yes, yeah, that's the injection. And I guess we should put all this in context, right? Like, this is small compared to the entirety of KKR, but it doesn't make anyone less nervous. For more on this, we're joined by Bloomberg credit editor Bruce Douglas. Bruce, I look at these stories and I'm like, haven't all of these funds learned from what happened with BREIT, for example, when they got this like huge cash infusion from the University of California? Are some of these BDCs looking for those lifelines, or are they going to do what KKR is doing and just turn internally to look for cash infusions to their struggling funds?
Yeah, well, it's interesting. I mean, this is kind of coming on the same day as we've seen another story about Apollo actually looking to sell out of its BDC. So the KKR example, if they're trying to buy their way out of trouble by this capital injection, 150 of preferred equity, 150 million share tender, and as you say, also waiving their management fee, which suggests kind of how keen they are to stabilize this fund, which really has seen a big a big jump in defaults, a big jump in the number of non-accruals or non-performing loans. But this is one strategy. Apollo, on the other hand, is taking a more defensive strategy by trying to, by essentially, according to reports at least, looking for a buyer, possibly another BDC, of its underperforming BDC.
I'm just, Bruce, trying to work through the details of how this is actually going to work. So KKR injects money by buying a different share class and also converts. But is the fund also doing a $300 million buyback on top of that?
Yeah, so there's 150 million of preferred equity, there's 150 million tender offer, and there's a 300 million share buyback. And what they're trying to do with the share buyback is put a floor under the stock price. I think they've said it around $11. It's currently trading just under that. Whereas, that's actually at a kind of significant discount to what to what KKR itself kind of valued the shares at. So it is a kind of significant markdown, but it is an attempt, as I say, to put a floor under the price and stop some of the bleeding.
Bruce, I'm just looking at, they're having their call right now on this BDC, and they're talking about what drove down the decline. They talk about Medallia, an asset we knew was struggling from Thoma Bravo, which, by the way, the concerns about it predated any of the AI concerns. Cubic Corp, Affordable Care. These don't necessarily seem like AI woes. I mean, Affordable Care is a consumer healthcare company. This is one of the things that's supposed to be protected. How much of the issues with BDC is actually things like software exposure, Bruce, versus just issues with underwriting and maybe not being as having as much scrutiny as they should have?
Yeah, well, I think that's a very fair point. I think that obviously there are some underwriting issues here which are entirely separate from the issues we've seen around the AI threat to software as a service business models that are a kind of mainstay of the private credit market. Medallia is an interesting one. Clearly, the KKR fund isn't the only fund that holds this loan, and there may be implications elsewhere. And as you say, with the Affordable Care credit, there is a question there, not so much about developments in technology, but about how much scrutiny, how much due diligence was actually applied to the underwriting of that loan.
I want to just quickly ask about the Apollo story. What is the Wall Street Journal saying about an asset they're shopping, and how close could they get to net asset value for it?
Yeah, I mean, I think net asset value at the moment is the stock's trading around 85% of net asset value. I think it's seemingly unlikely that they would get a cash offer for it. It looks more likely to be a BDC kind of pledging its own shares to buy the Apollo asset. Clearly, it's very early days. This is a sourced report, and it's possible that no deal may happen at all. But it is interesting that this is clearly another way of trying to tackle the trouble that we've seen with BDCs under pressure, disappointing earnings last week and this week. And this is their attempt to try and deal with that issue.
Anyway, just seeing again on that earnings call for that KKR BDC, that Medallia was marked down to 54 cents during the quarter, so that's definitely a painful loss. Bruce, thank you so much for joining us. Bruce Douglas there from our Bloomberg credit team. And tomorrow we're going to hear from a CEO who was warning a lot about private credit, but kind of backed off of it in this recent earnings report. Will be interesting to hear what Jamie Dimon, the JP Morgan CEO, has to say. He's going to be sitting down with Francine Lacqua at the JP Morgan Global Markets Conference in Paris. Again, that's tomorrow around 9:45 a.m. New York time. First, coming up on this show, Ann Bartels from Sanctuary Wealth sees the S&P 500 topping 10,000 by the end of the decade. She's going to join us next. This is Bloomberg Open Interest. Sanctuary Wealth strategists are setting a high bar for earnings growth expectations. Chief investment strategist Ann Bartels says our year-end target for the S&P 500 remains at 7,500, and our longer-term target has the S&P 500 reaching 10,000 to 13,000 by the end of the decade. Ann joins us now. Some punchy numbers, and I feel like this is a market that is just starting to wake up to this. We were talking about just before we went on the huge run up in semis. I think we have a one-year chart of Micron. I mean, the thing is hockey stick higher in the past couple months. Yes, I understand the bullish thesis, But I mean, look at this. Is this something that you can chase, even if you have all of the hopes and dreams in the world of just how much AI will be powering semis?
You don't chase it, but you also don't short it, that type of pattern. I do think that semiconductors are the industry leaders. It's been a thesis that I've been carrying for many years, and I think people are now just waking up to the story of semiconductors. I would like to see a pullback, but trying to predict that pullback when they go vertical is very challenging. But if I own them, I want to continue to own them, and I would wait for a pullback to aggressively buy. But the one stock that does not look like that is NVIDIA. NVIDIA has done nothing for months and is just starting to perk up. So NVIDIA breaks out, you're going to continue to see the semiconductor grouping or like the SMH or the SOX continue to go up.
By the way, is that because NVIDIA already had its run up? I mean, was Micron a stock that people weren't paying attention to because everybody was buying NVIDIA last year, the year before that, and now?
Yeah, well, Micron is memory, and people are now starting to realize that memory's in demand. NVIDIA created the AI chip. So NVIDIA led this whole movement and was consolidating, I believe, its gains, while the other semiconductors were coming on board. Because now people are waking up, it's not just going to be an NVIDIA story. There are going to be other semiconductor stocks that are going to be able to do very well in this high-demand chip environment. But NVIDIA is still a leader. So if it percolates and starts waking up, it's going to continue to run the semiconductor space in our view.
All right, we're going to keep you with us. Ann Bartels sticking around through the opening bell. Check on what's going on with futures ahead of that after another all-time high. On Friday, we now see futures down just 0.1% on the S&P and on the NASDAQ. The 10-year yield holding well below 440 at 437, and Brent crude at 102.99. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller on a Monday morning after we hit, again, all-time highs Friday. Nobody's afraid of holding risk over the weekend. In fact, everyone's doing it. We see futures down just about 0.1% on the S&P and the NASDAQ, but optimism is high at these levels, about 7,400 on the S&P 500. You hear the opening bell, and you can see Eli Lilly ringing at the New York Stock Exchange. They're optimistic as weight loss drugs have powered a 400% rally in this stock over the past 5 years. Meanwhile, TransferWise is ringing the opening bell down at the NASDAQ market site. They're now just called Wise. Pretty soon it'll just be W, I'm sure.
I hate it. I hate the trend of companies shortening their names.
Yeah, it's happening though.
I mean, but these things are cyclical. I think we'll come back. We'll start adding vowels to companies that have taken the vowels out of their name. Tomorrow, maybe we'll be spelled with a W.
Tomorrow. And they only use one R also.
I mean, come on. This is, of course, the consulting firm that OpenAI is buying, forming with this new announcement. The stock that I'm watching this morning, Matt, is Moderna, up a nice 7.33%.
Again.
It extends, well, 12% is what it gained on Friday. So it's working on a new vaccine for the Hantavirus, which has infected at least one American from its cruise ship in the Canary Islands. Shares are up more than 85% this year. And Matt, Sam Fazeli was saying to us, like, this is not another COVID outbreak. But isn't it nice and comforting that someone like Moderna looks like they can quickly turn around a vaccine for these types of outbreaks? I feel like that should make us all feel good.
Yeah, I mean, and also maybe they can do it cheaply and easily with AI tools now. You know, even if this doesn't turn into some kind of global pandemic, which we all hope, and Sam Fazeli said it's very unlikely, it doesn't cost them a lot to develop this vaccine if they can use those tools to cut costs. The rally in chip makers that's blowing Dani's mind is also not letting up. In fact, I looked at those numbers and I thought they were for last week, but they're for today. This is the intraday trade. Again, Intel up another 5%. Again, Micron up another 7%. Qualcomm up another 10%. All record highs as retail traders pile into the AI trade at the highest level in a year. Let's bring back Sanctuary Wealth Chief Investment Strategist Ann Bartels. And, you know, I've been wondering with this technology, Ann, if if it doesn't change the long run trajectory of growth. You know, over the long run, we grow about 2%, sometimes more, sometimes less. But now it seems that we can do more with less. We can do more for less. There's huge demand for everything from construction equipment to cooling, HVAC, energy. You know, it seems like we're adding jobs again. So is the economy getting a huge boost here?
I think the economy is doing very well, and surprisingly very well, but it's because of this AI build-out. The demand is very high and the supplies are very short, right? That's economics 101. When you have high demand and low supply, prices go up. And one of the little things that I learned when I was at Merrill Lynch many years ago, when PPI starts going up, early stages, not crazy, it really boosts. It's a good indicator for corporate profits. And we have been seeing PPI go up. And corporate profits are going up. And that's why I think the market is so focused on stocks, and why we're hitting new record highs is these companies are not as sensitive to energy, and they're able to produce stellar earnings, and it's being reflective in the stock prices.
The thing that I just wonder is, in this future, and it feels like an increasingly nearer future, if we get this promise of AI, it's very clear which part of the market it benefits. Are we fully pricing in the losers? I know you say, Matt, it adds jobs, but a lot of those jobs are just temporary. You build a data center, it requires all the construction, all the things that go into it, but you basically just need like 50 HVAC people running around managing that. Versus if you were to have the same amount of spending in healthcare or a traditional job like automotive or pharmaceuticals, that would be adding like 15,000 jobs or 1,500 jobs for the same amount. So do you look at that and say, okay, yes, the economy gets a boost, but the labor market suffers, and maybe things like consumer or more cyclically oriented companies become less attractive?
Well, right now, the labor market is steady to actually improving. And what happens if jobs get created that we haven't even thought of? Like I heard a person saying, and this is so true, look at influencers. Who would have thought that you'd be able to create good income? There are millionaire influencers that are out there.
And by the way, you survey kids and they're like, what do you want to be when you grow up? And they're like, YouTube star, influencer.
Yeah.
So, you know, and when I first started seeing this, you know, it boggled my mind, but it's a real career. We don't know what jobs are going to be created from AI. And my guess is we'll probably have more job creation than we actually realize.
Well, we also need a lot of old economy jobs, right? It's not just HVAC, plumbing, and electrician. You
it's
also
boilers
need,
now.
I was going to say boiler makers.
This is my favorite story.
Because they're not enough gas turbines and they're so hard to make. But it's really astounding. Still, we didn't see, oddly, the internet change the trajectory of growth, like over the longer term, right? We're still growing at the same pace as we were before the internet. So this technology isn't going to necessarily move the needle on how macroeconomists view the U.S.
Longer term. It can have a shorter term over a couple of years, but then what happens is you reach capacity, and then things flatten out, and probably in terms of equity markets, probably peak and go into a major correction.
And by the way,
we're far from that.
But your super bullish target is for the end of the decade. So
correct.
2030. What is it about these big round years, 2000, 2030, you know, the dot-com bust, and what I'm guessing you're forecasting to be at least a lull after that, right?
So there's something that's called the decennial pattern. It's something my aunt taught me. She was a technician for many years, Bernadette Bartels Murphy. And what she told me is the year zero tends to be the year where there's euphoria, right? You're going into a new decade, everybody's happy, and markets tend to have a huge spike up and peak. And then you go into a lull for many, many years. So secular bull markets last 15 to 20 years. We started a secular bull market in 2013. I'm estimating we're going to end that cycle in a bubble. And that's how I get to 10,000 to 13,000. And then we peak, and then, Matt, this is what you don't want to hear. We go into a secular bear market for 15 to 20 years, meaning that stock prices are flat for that time period.
So we basically have 4 years to keep riding this wave.
Yes, and it's going to be an amazing wave.
By the way, like the earnings this season have been so incredible. They've overshot all analyst estimates by a long ways. In fact, when you usually see this type of uptick in growth, it is coming out of recessions. It's coming out of COVID is the closest comparable. But we're not really in that part of the cycle. I just wonder what you make of this like addition of corporate America, and I guess maybe 2/3 of it is semis to bring it back there, but this addition into the earnings that we're seeing.
Well, we're in the digital era, and what's happening is technology is getting better and it's getting adopted a lot faster. Even the CEO of Anthropic said their demand far exceeded their expectations. I think their high-end expectations was like 20-fold in growth, and they got 80-fold in growth, which is incredible. So I think that's what's happening is we're not even understanding how AI is transforming companies, economies, and the world. We're still trying to figure that out and digest that. But if we follow what analysts are doing with their numbers, they're still raising their estimates. So that is still very bullish for the markets.
I had no idea this was a trade that you passed down through the Bartels family.
Yeah, second generation. Aunt Bee went to Wall Street in 1956, and she was on the trading floor of Ladenburg Thalmann, 25 Broad Street.
Market technician royalty. We are so honored to have you here.
I've known you for 20 years. I didn't know that, so I'm learning stuff every time you come on.
Thank you.
Thank you so much for joining us at Sanctuary Wealth, Chief Investment Strategist and the Queen of Market Technicians herself, Ann Bartels. Let's get a check on your equity market. Just muddling along. Little change this morning after 6 consecutive winning streaks. That's the longest winning streaks. Number of winning streaks since October of 2024. What's powering us? It's still the semi trade doing really well. Micron, Qualcomm, Intel, all of them adding. Eli Lilly is up there, so have some good healthcare companies. ExxonMobil, so energy shares going higher with still uncertainty over the war in Iran, with Trump rejecting the latest offer from Iran in those peace negotiations to the downside. Too bad for Alphabet. Alphabet was so close to becoming the biggest company in the world with this big lift they've gotten from AI. However, that trade takes a breather today with a lot of the other Mag 7, Microsoft, Tesla, Meta, all of them are down, as is Amazon in today's trade. So when we look at the individual sectors, energy is doing well, again, because of the higher oil prices. It's the top performing sector, up 1.5%. So some of those nerves are impacting the market, but not hitting us anywhere else. I showed you Mag 7 was down, so that's what's dragging us in the comm sector. But overall, a market that's a little changed this morning, Matt.
All right, so that's what's happening in markets. We're going to, when we come back, give you the latest on a push for peace that is faltering under Pakistan. President Trump will see what Chinese President Xi can do to help ease the problems in the Middle East. Leslie Vinajamuri of the Chicago Council on Global Affairs joins us to talk about that next. This is Bloomberg Open Interest.
Almost 15 minutes into your trading day, let's look at the top calls. What the analysts are saying this morning. First up, Baird upgrades Starz Entertainment, saying the company holds a unique and favorable spot in the entertainment landscape. Healthier monetization strategy, compelling content slate, and improving profitability profile. We're also going to be speaking to the company's CEO Jeffrey Hirsch in the next hour. Next up, Bank of America raising Pitney bows after a stronger than expected first quarter. Said it's finally starting to turn things around. They highlight slowing revenue declines, cost cuts, and solid share buybacks. Finally, UBS turns cautious on Dell, downgrading the company, saying stronger AI server demand is now largely reflected in expectations, and that leaves little room for upside. So, Matt, those shares down 4.4%.
All right, Dell taking a hit today. President Trump and Iran rejecting each other's latest peace proposals, with Trump calling Iran's response totally unacceptable. Now Iran says it has submarines deployed in the Strait of Hormuz. Deep roaming submarines, which is weird because it's only like 50 meters deep on average.
Easy to find submarines.
Yeah, I mean, you can see them.
Yes.
Meanwhile, President Trump is set to speak with Chinese President Xi in Beijing on Thursday. And for more on what to expect, Leslie Vinajamuri joins us. She's president and CEO of the Chicago Council on Global Affairs, but in New York with us on set. Great to have you here, Leslie.
Thanks for having me.
I was looking at the sort of peace talks, if you can even call them that, yesterday, and wondering if this administration isn't just punting until Thursday, when President Trump is in Beijing and he can ask Xi for a little help here.
Yeah, I mean, President Trump goes to China wanting to look very strong and, in fact, as we all know, looking quite weak. Hasn't managed to open the Strait of Hormuz. Had to kick that meeting with President Xi further back. It's finally happening. And now he has to, as you said, go to Beijing and ask for China's help to get Iran, a pretty small state, right, to comply, to really work with the U.S. Iran's, played its hand, unfortunately, for those of us in the West, quite effectively. And China has leverage, but whether China would actually use its leverage with Iran on this dimension, it seems very unlikely.
By the way, Leslie, not just a small state, it's a country whose military we have, according to President Trump and Defense Secretary Hegseth, completely destroyed. I mean, we've rendered their military absolutely useless.
And there's no leaders left.
And, we've taken their nuclear program. Last year, we erased their nuclear program. So what cards does Iran have? How can it possibly, keep the Strait of Hormuz closed with no military? And why do we care since it has no nuclear program?
Well, you and we all know that Iran has a nuclear program.
Okay.
And even President Trump now wants to see that uranium enrichment capability sort of stopped and unwound. And that's not really seemingly even part of the cards right now in those talks. But what Iran has is that asymmetric power, and it's played it incredibly effectively over the Strait of Hormuz. And we know the costs, right? Americans are looking at potentially, if this doesn't get resolved, paying $6 to $8, for gas at the pumps. It's quite extraordinary. So, that problem sits there. It looms very, very large. President Trump goes to China, and what does he want? He wants to be able to deliver wins. China's purchasing soybeans, Boeing aircraft, maybe establishing a board of international trade or a board of international investment, which may or may not have any real significance. But I think everybody knows that the real crisis, the sort of immediate and urgent crisis, is Iran. And it's not the nuclear program, it's the Strait. And he will be seeking to see whether China will do anything to help unlock that. The other thing to really watch here right now is that the Brits and the French and 38 other nations, or 40 altogether, are trying to come up with a plan that could actually help govern the Strait were it to be reopened. And this is going to be critical. I mean, we've been hearing since Davos about the importance of middle powers, following on from Mark Carney's speech. And we're seeing, in real time, a bunch of middle powers, actually quite powerful ones, try to come together with a proposal. But unless or until the United States can get some sort of deal with Iran, hopefully with China, helping, those middle powers can't really cut through to keep that straight.
Why would Iran ever allow something like this? As you point out, this is incredibly powerful leverage for them when they don't have leverage militarily or anywhere else. So why wouldn't this threat of Iran being able to seize and halt the Strait whenever they want just continue from here on out?
I mean, I think it will. I think you're exactly right. This is the deep trauma, because it didn't used to be a problem. This is the trauma that I'm sure, I hope much of the administration is feeling. The U.S. has things it can offer. It can offer to lift sanctions. Obviously, Iran wants that. It can offer to unfreeze some of Iran's frozen assets. Those are big gifts. And President Trump wants to be able to demonstrate that he is getting something back that isn't what America already had, which was free access, free. The waterway was open and not being used instrumentally in this way. So what does he get that he didn't already have before February 28th when those strikes began?
What can he get that we didn't already have before?
I think what he wants to be able to, the thing he can claim, because he's not getting regime change, that sort of story went nowhere fast. Is some sort of commitment to a nuclear deal. And there was a nuclear deal, as we know, the JCPOA, which Trump and his first administration let go of. There's been talk, but no movement for a very long time of getting a new nuclear deal. And I think at some point that might be on the cards. Right now, it does not seem to be on the cards. And it is important, right? Iran has capabilities, and there's a real desire on the part of the U.S. and others to see those, blocked. For Iran, there's everything to play for, unfortunately. Control over the Strait, a nuclear program that has capabilities to be developed, So unless some other state, China, comes in or some other incentive comes into play, it's hard to see how we get this situation unblocked.
Leslie, thank you so much for joining us. So great to have you in studio with us. That's Leslie Vinajamuri of the Chicago Council on Global Affairs. Coming up, OpenAI turns to private equity firms to deploy its AI within their portfolio companies. That conversation next. This is Bloomberg Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks. About 20 minutes into the session, we're seeing gains now on the S&P 500 and the NASDAQ. S&P 7410. So we continue to ratchet up to higher highs, even with oil up a little bit, 1.5% to 102.90. The dollar little change. Nvidia helping to drive these gains today. Really, the chip makers. So look at Nvidia, look at Intel, and then if you look at the memory makers, they're all up huge as well, all at all-time highs. Moderna gaining on concern about, what's the virus called again? Hantavirus.
Yeah.
Okay, and then Dani, what on earth does Babcock and Wilcox do?
So this is a boiler company, and it's a company that was almost bankrupt because nobody was using like coal-fired things that they need boilers for, and now it is having an insane time because AI data centers are using them to plug the turbine kind of gap, and its earnings were crazy and its shares are up a lot.
Let's go then straight to the AI story because we got breaking news about OpenAI and private equity at the top of the hour.
That's right. Joining us to discuss is Bloomberg Tech editor Seth Figerman. And Seth, so the story that Matt's referring to, OpenAI, you've been reporting that this was going to happen, forms a JV led by TPG, all of these private equity companies. So what is this? Is this just OpenAI going, here is our wonderful model, please use it in all of your portcos?
Something like that, yeah. Basically, they are moving from just focusing on building bigger and better models to figuring out how do we get more companies to adopt and use that technology. And the answer is it requires a lot of staffing. They need to basically deploy what they call forward deploy engineers, hundreds, possibly thousands of them, to all these different companies in the US and around the world to help them work through hiccups and figure out the right objectives and really tailor this technology for them. And I think OpenAI, Anthropic, and other leading AI firms have realized maybe we need kind of a separate entity to help support those costly efforts.
Dani was talking about costs earlier, and we were marveling at the Business Week story on people using Mac Minis with OpenClaw to create their own.
Yeah, and like Uber exceeding their entire inference budget for the year.
Yeah, exactly. So that's what I'm wondering about, inference budgets, right? These companies, even if their PE owners hand them AI tools, they still have to consider the costs, right?
Yeah, and I think here, like OpenAI is basically raising, it sounds like more than $4 billion in capital from these investment partners to support this effort, which is partly going to go towards staffing and partly going to go towards just generally acquiring and rolling up businesses that already operate in this space. Even for an OpenAI or Anthropic that are spending incredible amounts of money on their computing costs, this is still a meaningful sum, and they need a different entity to handle that.
How is the ownership of the structure working? And I know they're also, adding on a consulting company with this too.
Yeah, so OpenAI will maintain majority control, majority ownership, which is an interesting idea here. They partner with some of the largest financial institutions in the world, and those firms seem to be trusting OpenAI to sort of set the direction here. It's saying nobody knows better than OpenAI how to shape this technology.
PE's whole shtick is to be the majority owner.
So they seem to be giving up a certain amount of control here for that to happen. The flip side is they get to be closely partnered with one of the 2 or 3 leading AI firms in the world as they try to accelerate adoption of that technology.
All right, fascinating stuff, Seth. Great reporting on the Bloomberg terminal. You can find Seth Figerman's stories on OpenAI and Anthropic, getting into every single aspect of our business lives. Coming up in the next hour, BlackRock's Mike Pyle joins us to talk about the stakes for Trump's China trip and the nonstop AI rally. Plus, Flex's CEO explains the spin-off plans for her AI unit, and we'll talk media consolidation with the CEO of Starz. This is Bloomberg Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Dani Berger. Stocks are higher after 6 weeks of a bull market run, despite, oil costs above $100, Iran having submarines, all of that. It doesn't matter. All that matters is AI.
Deep roaming submarines, according to the semi-official news agency. Coming up, totally unacceptable. Oil jumps as President Trump rejects Iran's latest peace offer.
And a high-stakes week for diplomacy. President Trump heads to China for talks with Xi on Iran and trade.
Plus, from AI infrastructure to media to private jets, a packed C-suite lineup ahead with the CEOs of Flex, Starz, and Bond. But we begin with the difficulty of hedging AI risks. Jessica Noviskis of Marquette Associates spoke on surveillance.
There's a few different ways that we could see a hiccup in the AI trade or a crack in the AI trade. And then I think that becomes a really big issue. I think it's hard for markets, though, to prepare for that, to do like a weighted average base bear bull like we used to do in the old days. I think that that is sort of not an option if you want to continue to participate in market trends. So it's sort of play the market's game, but sleep with one eye open, because if we do see the crack, I think it could be really intense given how much momentum has built up in the market.
Joining us now is Mike Pyle. He is deputy head of Blackrock's portfolio management group. He previously served in the Biden administration, where he led the U.S. international economic agenda and advised the president on issues like geopolitics, energy, and AI. So much experience in Washington, so much experience with Blackrock. It's great to have you here with us,
great
Mike.
To be here.
What's your take on, Jessica was saying there could be some crack, maybe a black swan in AI, but investors don't have a choice in terms of whether or not to play, right? Because this is a revolution that could change the trajectory of growth in the long run.
So I'd say two things. I'd say one, I'd say the first 3-4 months of the year have heightened our conviction in BlackRock on the deep underlying trends around AI and the transformation. I think one thing that's been highlighted is, if anything, we're underbuilt, not overbuilt when it comes to the scale of demand and working to meet it. The other thing I would say is, listen, this also highlights just a core point we've been making, which is diversification is in short supply. And that's true whether you look at the bond market or the equity market. Bonds, especially long-dated government bonds, not serving that traditional hedging role. The equity market increasingly concentrated. Finding diversification, tough in portfolios, something we spend a lot of time working with clients on.
Can I just follow on the AI, industrial revolution? Is this right now a demand shock, because we're all trying to get a hold of the chips, of the memory, of the plumbers, of the HVAC, people who lay cement, the land, or is it, you've called it a longer term, maybe a positive supply side shock?
Yeah, I think it's both and it depends on what is the horizon you're looking at. I think you're exactly right. Kind of short to medium term, this is a huge use of resources to build out this CapEx in the United States, around the world. All of the inputs that you're describing, we're short them. And we need to figure out a way of getting this capacity in place and do it in a way that's going to minimize the pressure and the inflationary build on the economy from it. But yeah, medium to long term, what is an inflationary pressure in the short run becomes something that's much more disinflationary, precisely because generate stronger productivity means we're producing more per unit of input, and that ultimately is positive for growth and positive for more disinflationary trends in the economy.
Just because of how huge of a force this is, how do you even find diversifications? The winners feel like they're tied to AI in some form or fashion. We've been talking about a boiler company this morning that was almost bankrupt and just had an insane earnings output today because they're using boilers in AI data centers right now. You mentioned the bond market. These AI hyperscalers are issuing an insane amount. It's like the railroads again, and they're on their way to overtaking financials as the biggest pile of debt in the corporate bond market. So how do you even find diversification when this kind of is the story of the economy right now?
Yeah, I think it's one thing that we've been focusing on is the degree to which moving away from that 60-40 stock bond balance portfolio into something that has a higher share of alternatives, things like market neutral strategies. In addition to a shortage of diversification, one thing we've been highlighting is the degree to which dispersion is actually quite high in these markets, whether you're looking at equity markets, bond markets, the gap between the biggest winners in markets and those that are lagging, that's that's historically wide. What that means is for alpha managers, for long short managers, the opportunity set to generate uncorrelated alpha high. And we think those types of uncorrelated strategies have a really important role in portfolios when diversification through traditional beta exposures is in really short supply.
So talk to me about what you do specifically at BlackRock in your group. I was looking at your mentor, Ron Kahn, wrote a book about active management, and he has this equation. I think we have a full screen of it, which basically shows your information ratio, which is not investment return IR, but in my mind they're linked, right? Equals information coefficient, which is what your forecasts are and how right they are, times basically the giant pool of investments that you can make.
Yeah, so I think depending on the investment strategy, depends on kind of which term of that equation you're leaning on. I have colleagues who invest in the macro space, and I think for them, macro is inherently a pretty low dimensionality space, low breadth space, as we say. As we see here, what is driving the macro market at any one point in time? Just a handful of things, and you've got to get those things right and adjust. And be flexible around them pretty rapidly. My friends on the systematic platform, they do something else entirely. Ron Kahn and others, they're all about the breadth. They're all about, we're going to be on balance more right than wrong, but what we're really going to be is have hundreds, if not thousands, of distinct views that we put in a portfolio. And on balance, by having a bunch of different views that we're somewhat more right than wrong about, we're going to generate persistent, durable alpha. So again, depends on strategy. Macro is going to be much more about that forecasting skill. Systematic is going to be much more about the breadth of your exposures, the number of different views you have. And so we see both those types of strategies work on the platform at BlackRock and elsewhere.
I just wonder for the business, and a lot of these are the liquid alt business. They're liquid strategies. They're not correlated with a typical equity or credit strategy. We had seen this emergence of, let's call them semi-liquid alternatives and credit and private credit and BDCs that we learned are maybe more on the liquid side than semi-liquid. I wonder if you're seeing any difference in demand of investors who want strategies that are uncorrelated and look to some of the stuff that your team is running and is like, oh, these are actually liquid. Have you seen any change in investor appetite because of some of the ruptures in other parts of this market?
So I'd say, listen, different types of strategies each have an important role to play in portfolios. Things like private credit strategies can generate income that can be really durable ballast in a portfolio and also have an important role to play in the market we're talking about. At the same time, we do think there are a role and an important role for more liquid, more market neutral strategies, both because of the market neutrality that they offer, that sort of sense of getting away from the big betas and the way in which they're less diversified than they have before, but also, of course, liquidity matters, and building strategies into a portfolio that are going to be there when you need them, regardless of what comes in markets, is a really important part of an overall portfolio mix as well.
All right, Mike, you're going to stick with us because we have a lot more to talk about with BlackRock's Mike Pyle. Let's get a check right now what's going on in the markets. Once again, at new highs, 74.10 essentially on the S&P 500, the NASDAQ approaching now 30,000. When we come back, President Trump calling Iran's response to his latest peace proposal totally unacceptable, and Iran says it's got deep roaming submarines. All of this ahead of a really important meeting in China on, well, for us, Wednesday night. In China, it'll be Thursday morning. This is Bloomberg Open Interest. Now to high interest, look what's making headlines around the world. A dangerous zero-day bug was discovered in widely used software, according to Google researchers. The company says a cybercrime group was used or did use AI to find and weaponize it. Google alerted the developer who patched it before any attack, marking in the first real-world case of an AI-assisted zero-day caught in time. If you know what a zero-day is, that's
it means a cybersecurity threat that could bring down the entire system.
Oh, okay.
Just like really, really bad.
That basically makes it so much more interesting.
Yeah.
It's a meme. All right, U.S. cruise passengers exposed to a rare Hantavirus are now in Nebraska under monitoring with one confirmed Andes strain case in biocontainment. 3 deaths are linked to the outbreak aboard the cruise ship. Unlike most hantaviruses, this strain can spread person to person. Officials stress that the risk is low, I should say, but global quarantines and 42-day monitoring reflect growing caution. And Iran's semi-official news agency says its submarines are acting as invisible guardians of the Strait of Hormuz. The report says the vessels can sit on the seabed, evade radar, and fire anti-ship cruise missiles, but gives no detail on how many submarines were deployed. And also, the average depth is only 40 to 50 meters, so you can probably just see them.
Yeah, I was going to say,
right?
Evade detection. Really? Not so sure about that one. Brent is moving higher this morning, Matt, not just because of that story, though. President Trump also over the weekend rejected Iran's response to his latest peace proposal. He called it totally unacceptable in a Truth Social post yesterday. Joining us now is Bloomberg senior editor Wendy Benjaminson in Washington. Wendy, all of this just leading up to the meeting later this week between Presidents Trump and Xi. Is this going to be top of the docket? Presumably so. Are we expecting any progress, any movement in Iran because of these conversations?
Well, that's hard to tell at this point. It certainly will be the elephant in the room hanging over everything else. I mean, the sort of, the stated goals of this meeting are, one, just the event of the meeting itself. It is the first meeting between Trump and Xi since 2017. Famously, Joe Biden didn't go to China at all during his presidency. So this is the first time the leaders of the two superpowers have met in a very long time. And then they're going to be talking about, they're trying to keep the status quo on trade and maybe some investment things that they might talk about. But you're right that they can't talk about anything else as long as China is being cut off from its major oil supplier, which is Iran. China may want to use Taiwan as leverage against going in and helping Iran with the war. But we're still waiting and seeing whether that will happen. But that is certainly what a lot of China watchers are expecting to have happen.
Wendy, when President Trump went to the Middle East, he brought with him an entire, a massive entourage of CEOs. And, every day talked about all the deals that he was making and those companies were making. It's my understanding that he's not bringing CEOs with him now. What are we expecting to really get out of this? And what's the tick-tock of, when is the meeting going to be? When is their state dinner going to happen? What's the pomp and circumstance, and what gets down to the nitty-gritty?
Sure. Well, you're right. They aren't bringing a ton of CEOs. They are bringing, Treasury Secretary Scott Bessent, who's meeting with his Chinese counterpart in Seoul, Korea, while the principals are meeting in Beijing. Trump leaves tomorrow afternoon. He gets there Wednesday. They meet Thursday, state dinner on Friday, and then he comes back to the United States. And so, we'll see. Like I said, they're going to talk about just maintaining the status quo on trade will be a win for both sides in this meeting. Trump had put on triple-digit tariffs on China and then backed off. And they're going to talk about some investments, but I'm quite sure Iran is going to, like I said, come up in the discussions. Trump wants China to not get involved in the war. He doesn't want Iran getting the help from China. On the other hand, China, which wants its oil and diesel and goods that come out of Iran, they may say, well, okay, then you can't defend Taiwan if we decide to bring it back into the fold. And what's worrisome about that for a lot of China watchers is that while other U.S. presidents have really kept this policy that the U.S. will defend Taiwan against a Chinese incursion, Trump isn't that. That's just never been a big thing for him. It's never been something he's concerned about. He's certainly not concerned about maintaining the norms of his predecessors. And so we'll be looking to see if Taiwan becomes a bargaining chip to keep China out of the war with Iran.
Wendy, thank you so much for joining us. Those conversations, again, happening later this week. Bloomberg's Wendy Benjaminson in Washington, and Mike Pyle of Blackrock is still with us. Mike previously served in the Biden administration. He advised the president on issues like geopolitics and energy as the Deputy National Security Advisor for International Economics. I'm sure you're happy you're not in government at this moment, Mike, but this is like exactly your wheelhouse of these sorts of things and the disruptions on this U.S. economy. It's a market that very quickly said, this is a disruption we can handle. What happens if inventories continue to rise? Have we really seen the full economic impact of what it means to have the strait closed?
So already this is a global shock. We've been talking for some time about the way in which it's differentiated. I think you're exactly right. Part of why we've seen what we've seen in U.S. equity markets and U.S. markets more broadly is, we're the most insulated economy in the world from this shock. I was in Asia last week. Clearly they're feeling this already in a more meaningful way. And I think when you look then at the broader picture, I think there's some good news, but also risks out there. Good news, ceasefire does appear to be durable. There have obviously been moments when it's been under pressure, but that it's held, I think, is a positive. Moreover, I think the word is that the two sides are getting relatively close on some of the nuclear issues, which is a positive. And on the flip side, and from a market perspective, from a global economic perspective.
Hang on a second. How close could they get on nuclear issues? Iran feels that it's their God-given right to enrich uranium and have a nuclear program, and the president wants them to have zero nuclear program and no enriched uranium forever.
I think some of the reporting you're seeing is suggesting that in the room, away from the public positions, the two sides are getting closer, which I think is positive news. I'd say, the big issue sitting out there, though, is that the straits are still closed. And from a global economic perspective, ultimately from a global markets perspective, until the straits are open, until some of this pressure comes off of global energy markets, we're not going to really be out of the woods. And I think you're exactly right, Dani, that, in some ways there's been less than maybe was expected with respect to the degree of global economic disruption, but those inventories are getting drawn down, those shock absorbers are getting drawn down, and at some point we're going to reach the end of those shock absorbers, and then I think there is going to be real economic pain, particularly outside the United States, but really globally. So it's really important that we focus sooner rather than later on getting the energy flowing.
I mean, if it's global, that's going to hit us as well, right? Because even though the U.S. is relatively insulated, we have our own natural gas to drive those turbines for our data centers. We also sell a lot of stuff to everybody outside. I think S&P profits are like 40% derived from international, so it could be a real problem for the markets that don't really consider it a problem right now.
Yeah, so a few things. I think you're exactly right that when it comes to the U.S. itself, obviously it's a story of different markets. Oil, that's a globally integrated market. We're seeing a fair amount of pressure in U.S. oil and refined petroleum markets. Obviously we feel it at the pump. Every time we go to fill up the gas tank, Americans feel that. The flip side, I think exactly to your point, natural gas, that's different. The natural gas price in the U.S. still lower today than it was on the first day of the war, and highlights just how insulated we are in that very key industrial and electricity input. But I think you're also right that, yeah, the U.S. Economy, particularly U.S. corporates, are exposed to global demand. Now, that's a little different now when so much of the market environment is driven by this AI theme, and so much of that AI theme is driven here at home. So I do think that part of what we're seeing is markets saying, yes, the U.S. is exposed to this global shock. Yes, the rest of the world is exposed, but the U.S. equity market, most insulated sector in the most insulated economy in the world, still has some cushion around it to perform, even in the event that this shock does get worse from here.
In terms of kind of the bigger, long-lasting impacts of this, we were just speaking to Leslie Vinajamuri, who was speaking about the middling nations. There was that speech at Davos from Mark Carney. You've heard France partnering with other smaller nations, saying maybe we try to come to some sort of resolution of how we can dictate what happens in the Strait of Hormuz. Do you think there is a real coming together of middle global powers, that is a reshaping, that U.S. and China become less reliable partners and something else happens in the middle?
So I think it is clearly the case that looking at the middle powers, as you say, is going to be a really important dynamic in the world in the year ahead. I mean, for example, I think the economies in the Gulf, they are going through a pretty important pivot point in terms of the role they're playing in the world and the role they're going to play coming out of this war. I was in Japan last week. Japan is an economy that I think is really poised to have a pretty, powerfully positive role over the coming 5, 6, 7 years. They've come out of deflation. They're growing above trend. A lot of the seeds that were planted a decade ago around corporate governance reform are starting to bear fruit. I think there's a really positive story at play there, and I think will be at play for the years ahead. But I think what it highlights is there are a lot of really important currents, whether it's in Japan, the Gulf, India, elsewhere, that are apart from the big US and China story. And I think keeping an eye on those is going to be an important part of what it means to identify diversified sources of return in the years ahead.
Mike, what can we expect from this Trump-Xi meeting? Wendy Benjaminson was just saying that it would be viewed as a win if we just came away with the status quo. You were deeply involved in shaping and preparing U.S. policy for leader-level meetings between the U.S. and China. What do you think we can take away? What's in the realm of possibilities?
So I think Wendy largely had it right from where I sit. But I would say is, the structural reality of the U.S.-China relationship was true when I was in government, it's true today, is structural competition across a bunch of different domains: technology, trade investment, geopolitics, obviously talking about the Iran and Taiwan issues. In a world that right now is filled with a lot of uncertainty, filled with a lot of volatility, it is a good thing that structural competition is not on the front burner in terms of the Trump-Xi meeting today. And what we have instead is, some stability between the two largest economies in the world, between the two great powers. That is a source, I think, of enhanced confidence for global markets, for the global economy, that we have that fragile but important stability between those two players in a moment when there's so much uncertainty and volatility elsewhere.
Can China come in, and to Dani's question about the middle level players, China is obviously a high level player in this situation. Can China come in and help provide more stability by solving the problem that this administration has caused in the Middle East?
So I think one thing I would observe in China's behavior is, it's a very outward facing economy. They export a lot to the rest of the world, especially now in terms of the manufacturing industrial sectors that they've really been pouring huge amounts of resources with some success in recent years. And I think it highlights that, China as an export-oriented economy is relatively reliant on, the stable, open global order that for decades we came to rely upon. And I think one thing that, this moment highlights is as that comes under strain, as some of China's business model comes under strain as a result of it, they still, I think, are somewhat hesitant to step in to a more kind of front-footed place with respect to providing some of those global public goods themselves. So I think we're in this moment when China, is beginning to recognize that they are bearing costs as a result of some of the stresses on the global order, but isn't really prepared or willing to step in and provide that stability themselves.
When it comes to global competition, you mentioned technology. I feel like I've heard an argument be presented when people push back and say we're advancing AI too fast. There's no checks. There's no balances coming from the government or any other player. Often the retort is, well, China's doing it. And if China is doing it, we have to do it. Only about a minute here, and I realize that's not a lot of time for this existential threat, but does that push us to a place that's uncomfortable if we're just advancing AI with no natural break because we're trying to keep up with China?
So clearly, artificial intelligence is an important dimension of competition between the United States and China, between our leading firms, between the governments that represent both countries. That being said, I do think that we saw in the Biden administration some limited steps forward in terms of joint U.S.-China understandings, like around having a human in the loop on nuclear governance. I think it's going to be a hard path ahead, but one that it's important we keep working on.
Mike, so great to have you here. Really appreciate your time. Mike Pyle there of Blackrock. Coming up, Flex rises the stock on a strong outlook and plans to spin off its AI infrastructure business. Flex shares are rising after it beat expectations and issued strong 2027 guidance. The company also planning to spin off its AI-focused infrastructure business into a new public company, SpinCo. I think it's called for now. Probably that's not the name for the long term, but let's ask the CEO of Flex, Revathi Advaithi, who joins us right now, set to lead SpinCo. Revathi, great to get some time with you. Talk to us about this, this new business, what it encompasses, and what it will be called in the future.
Great. Thanks for having me again. Well, we don't have a name, you're right, and SpinCo is not the name, so hopefully we'll come up with a cooler name in the near future. Just as a quick reminder, Mike, Flex is a contract manufacturing company, world's largest manufacturer. We make a little bit of something for everybody. What we announced last week was the spin-off of our cloud and power infrastructure business. I would say 5-6 years ago, what we started building was a business that focused purely on power within the rack for a data center, distributed power across the data center all the way up to a utility, cooling and compute, everything put together. And that was well before the whole ChatGPT moment and AI became a thing. And as power becomes super constrained, cooling is a challenge. Putting these three technologies together as a complete solution for our customers is pretty significant. We announced this business last year has been around a little over $6.5 billion, is going to grow 65 to 75% this year, and then 80+% the next year. So that is what we're putting together, and that's the spinoff that I'm going to lead, and then I'll remain as chairman of Flex.
That feels telling in itself, Revathi, that you're now going to be the CEO of the SpinCo, yet to be named. Why is this the business that you want to bet your next chapter on? Why not remain the CEO of Flex and let someone else take that one over?
Dani, because it's my baby. My history is I led Eaton's electrical business. I have been in the energy space for the past 20 years. I have walked to every utility company in the last 20 years asking them to invest in the grid for the US grid to be more self-reliant. And so 6 years ago, when I got Flex to start investing in power, we've built up that business from scratch and really put together a technology infrastructure that puts compute, power, and cooling together. So it's my history, my lineage. It's the business I enjoy a lot. I've been fortunate that Flex has done so well, and we've been able to build this business. And we've done a spin-off before, right? We spun off Nextracker, which is a $17 billion market cap company today. So that's kind of why I'm going to go lead the spin-off, because I'm really deep in the power infrastructure technology space.
Which are the companies that are going to sustainably build revenue and margins on this? Because we've been talking so much today about this huge build out. And once it happens, right, we won't need as much of, or it doesn't look like we'll need as much of the CapEx as we're putting in the initial stages. Certainly that was the case when we laid fiber in 1999 and 2000. Which companies do you think, Revathi, are going to be the longer term beneficiaries of this revolution?
That's such an important conversation to have, because what we're talking about today is just the AI CapEx cycle and what is being invested in data centers today. But what is happening is a transformation of the grid and the electrical infrastructure itself, which needed to happen a long time, but hasn't happened yet. What do I mean by that? The traditional kind of AC to DC power infrastructure is what is deployed today, and we can't sustain the grid that way. So my view is today we're focused on the AI infrastructure. We're going to have to deal with the power density and the availability of power issue, which is going to really lead to a technology change in the utility infrastructure, solid state infrastructure, 800 volt DC. So my focus is today we're focused on AI. We continue to move into utility, and that electrical grid transformation is going to be what comes next. And I'm really focused on that's going to be a long-term thing, Mike. So I don't see this as a few years of CapEx investment and it goes away. It's going to be all the way to the grid that we're going to have to change over a period of time.
And the opportunity there is huge. But I wonder in the meantime, it does look like, AWS, Google are big users and big parts of your huge earnings assumptions to come. And again, it is clear why that is there. But I wonder, what do you need to put in place just to make sure that you don't have a situation where the hyperscalers all of a sudden decide that they're going to spend less on this? Or are there certain contractual commitments? What are the details on how you make sure that there isn't that risk that you tie your fortunes to just a few and they decide to pull back?
Yeah, and that's important, Dani, because we're not just deploying compute. We're deploying power, so which also means that we're deploying the power that powers the chip, the cooling infrastructure, the 800-volt DC, 400-volt DC power infrastructure, all of that together. So while hyperscaler spend is concentrated because they're $700 billion of the $1 trillion spend, we also supply all the way to the utilities. So the last two acquisitions we did are focused on really deploying large pods into utilities, and that's the business. So we've been diversifying the business from hyperscalers all the way to utilities. So we also do a lot for colos, enterprise spend, and utilities, and we'll continue to diversify the business that way so that as you come out of the compute cycle over who knows how many years, 4 or 5 years, the business continues to diversify into the entire electrical infrastructure grid.
Revathi, thank you so much for joining us this morning. That is the Flex CEO and the incoming SpinCo CEO, Revathi Advaithi. Now let's get a check on your markets this morning. Over an hour into your trading day, we're still moving higher. We're lower on tech. The Mag 7 is struggling this morning, hence why you're seeing the NASDAQ fall, even as semis have another really huge run, but we are up for a 6th consecutive week for this S&P 500, the longest winning streak since October 2024. Yields and Brent crude are doing something completely different. We're disconnected these various assets because you have oil moving higher, up 2.5%, and 10-year yields, that's pushing them up by 4 basis points at 439.33 this morning, Matt.
All right, let's get a look at some of the single stock stories that we're following for you at this hour. Constellation Energy, Dani kicked off the show with this, beating earnings estimates and maintaining its outlook as the AI windfall shows no signs of letting up yet. The stock is down 0.4%.
Imagine that. Barrick saying that it will repurchase as much as $3 billion worth of its shares. That helps to close the gap with its rival Newmont shares of Barrick up 7.33%.
Moderna extending Friday's massive gain. It was up 12% on Friday as it works on a vaccine for the Hantavirus, and it's up another 6.5% today.
Coming up, Starz, 1 year after its spin-off, can the streamer make the shift to more profitability? CEO Jeffrey Hirsch joins us in studio next. This is Bloomberg Open Interest. One year after its spin-off, Starz is under pressure to prove that it can deliver profits, and strong content is helping it. It's sustaining momentum as consolidation reshapes the industry. Joining us now, pleased to stay, is Starz CEO Jeffrey Hirsch. Jeff, thank you so much for joining. And I think this in particular is kind of an interesting part about Starz. It's a world where, Warner Brothers, Paramount, all the behemoths are coming together, and yet you fought the trend with now a year spinning out of Lionsgate. So why exist in this rarefied air of being a smaller company when everybody else is coming together?
So thanks for having me on this morning. It's been a year. It's been a great year. We're a lot stronger as a company today than we were a year ago when we were part of Lionsgate. We've done a lot of work to unwind a lot of the ownership of a studio structure and becoming really a strong network, and you've seen that in the numbers. Look, we are a focused streamer. We focus on women and underrepresented audiences, and that means we're complementary to all the broad-based streamers. And what that means is we can focus on our audiences. We can do it more in depth than anybody else and on scale than anywhere else. So as much as those other broad-based streamers are bigger in size financially, if you look at our audiences, we're probably the number one or two brand in the homes of each of our audiences because we are that destination for that content. Will
they pay more? Will your customers pay more for it because it's geared specifically at them?
Look, I think we've always wanted to be priced as a complementary service. So I think what you've seen over the last 2 or 3 years as streamers have moved away from chasing Netflix subscriber to drive profitability and raise rates, it's given us room to continue to raise our rate. So as long as there's a good gap between a broad-based streamer and us, we can continue to have some pricing power.
By the way, do you think it's an unhealthy thing for the overall ecosystem for there to be so much consolidation? Does it make differences in sort of like the creative output? I know a lot of actors are very unhappy that this sort of thing is going. What does it do to the overall media environment to have people fighting exactly the thing you're doing?
I think the stronger the broad-based players are, and if you look at the natural evolution of the space, you had cable companies and satellite companies, and now you have content companies becoming distribution platforms. And so the more the Warner Brothers and Paramount are stronger to compete with the Amazons, to compete with the Netflixes, with the Hulus and the Disneys, it gives us a great platform to be sold on top of. So today we're the second largest channel on Amazon. We're sold on top of Hulu. And so as those guys settle what they're doing, it gives us another opportunity to be sold on top of another broad-based streamer that's the #1 or #2 streamer in the home. And so that gives us a lot of opportunity to continue to grow what we do, which is very focused on those demos.
You lean into the to the IP strategy, basically, of something like Outlander or Power. Does that differentiate you think, enough from the other streamers that people pay attention specifically to your channel because they want those, or BMF or whatever it may be?
Yeah, I think the more that we're focused, the more we continue to put network shows on the air. So we have just coming out of the last season of Outlander. The fan base is obsessed with that show, and they're very sad that it's ending, but I think it's going to be a great ending next week. For the base, Amadeus premiered last weekend. And we've been trying to turn our slate over and get ownership back on the network. So Fightland with Curtis 50 Cent Jackson is our first Starz-owned original from separation. That will premiere July 31st. So our view, as long as we continue every week to have something on the air that really serves those two demos, we become the destination for those demos. It makes us very important for the broad-based ecosystem to be added on top of, much like we were in the old cable days.
Well, what is the process like? Again, you have shows that have a lot of fans, and I know Fightland, you're hoping, is going to be one of these other really strong IPs. What is the process like? I mean, you have, again, 50 Cent signed on to it. I'm sure it's not cheap to create one of these programs. What is sort of the math and thought that goes into it to say, okay, we're going to bet behind this horse, and we're going to build it up to be an IP that, again, reaches the status of some of your others?
I think we're uniquely positioned because we focus on those two demos. We know what those demos like. So we know what the Outlander fan base loves. We've been doing it for 14 years. So we have shows like Amadeus that feeds that fan base. We had a series of White Queen, Spanish Princess, that really feeds the historical time travel piece of that. Fightland has a lot of the same feel as the original Power. It's boxing in the UK, but it's in the world of crime and family drama. We have a show that we just announced, which doesn't have a title yet, called the Untitled Black Rodeo Show. It's based a family drama based on a black rodeo in Texas. That feels a lot like BMF. And so as we look at our development strategy, we're not trying to make swings at things that the customers have never seen before. Every show that we have is kind of mapped to a different show that gives us great confidence that these will be hits for us.
By the way, are we done making shows about like New York and LA? It feels like every new big program that's coming out is about like Middle America, somewhere else.
We are not done with shows about New York or LA. We'll announce a show within the Power universe pretty soon that brings folks back into New York City, and it's a little more modern times than before. And look, New York and LA are obviously a great place to shoot programming. New Jersey's a great place with tax credits today. But I think you have to serve the entire country, not just the coasts.
That makes business sense, the new properties that you're developing. What about keeping the old ones alive? As a businessman who's trying to apply like the science, to the creativity, how do you avoid like jumping the shark and make sure that you can have 5 seasons, 10 seasons, 20 seasons?
So it's interesting again because the components are pretty similar, and then you can bring the talent from one show to the next, and so that it's a recognizable name and to bring audience across. When we premiered BMF season 1, coming out of Ghost, which was one of the big Power spinoffs, 80% of the audience went from Ghost into BMF. It was half the cost. And so we make that trade all day from a financial point of view. And so having ownership, getting control of the inception point of a show and then be able to monetize it globally allows us to take cost off the business. And what you saw in our last quarter report Thursday is we moved our 20% guide from coming out of calendar 20, adjusted EBITDA guide or margin guide, coming out of calendar 28 to the back half of 27. And so we feel like we're actually, putting great content on the air that the audience loves, but we're also able to actually drive margin at the same time.
We were talking about this a bit in the break, but I was having a conversation with the director from a Netflix film that was basically like, it was an action one, and said we had to have an explosion in the first 5 minutes or we knew we'd lose our audience. Just how much has a creative process changed because of the competition for what is increasingly shorter attention spans?
Yeah, I think you have to really, in the first 1, 2, 3 episodes, have to get the audience, keep the audience, and really kind of drive with an intense, propulsive move to get the audience excited about the show. And if you wait to the back half, you may not have them there to get there. So we're in a much shorter attention span period. There's a lot of different vehicles that pull people's attention. It's not used to just be books, newspaper, and cable. Now it's everything. And so your shows really have to pop. And I think the one thing that we do better than most is just that. I mean, if you look at the Power franchise and all the spin-offs, every one of those episodes is packed with action. And you'll continue to see that with Starz.
It's such a fascinating industry that you're in, Jeff, so we'd love to have you back when you can. Jeff Hirsch there, he is the president and CEO of Starz. Coming up, private jet company Bond expanding its commitment with Bombardier to $5 billion. We'll discuss the plans of the CEO. Next, this is Bloomberg Open Interest.
The White House now out with an official comment on which CEOs are going to be accompanying the president to China. Just bear with me because it's a long list and it keeps getting longer, Matt. So we have Boeing, GE Aerospace, Cargill, Illumina, Visa, MasterCard, Micron, Qualcomm, Blackstone Schwartzman, Larry Fink from Blackrock, and David Solomon from Goldman Sachs. That honestly might even not be all of them. This list is slowly coming out. It's a lot.
Right, Elon Musk
CEOs.
is going.
Yes, Elon Musk. Thank you, I missed that one.
It is interesting
Tim Cook from Apple.
I thought they weren't going to bring that many CEOs, or that was the guidance previously. So now it looks like they're going to bring more. Also looking at a headline crossing the Bloomberg terminal from President Trump to CBS, he wants to take off the gasoline tax for a period of time. We've seen other, Mark Carney pushing for this in Canada, which doesn't make any sense because Mark Carney is a smart economist, and it's a horrible idea.
Because you just
from an
increase
economics.
demand?
Yes. Why subsidize demand if you have a supply shortage?
Well, at least because in the case of the U.S., you have midterms
I get why they do it, but it's
2026.
just the best cure for high prices is high prices.
Yes, that is true.
Private jet company Bond is betting ultra-wealthy travelers will pay a premium for a club-style experience in the sky. The KKR-backed company recently announced that it is expanding its commitment with Bombardier to $5 billion amid rising demand for private flights. Joining us now is the Bond founder and CEO, Bill Papariella. Bill, this is a fascinating industry. Very cool to be involved in. I guess you don't have any demand shortage in private jets, even with the higher price of fuel.
Yeah, I mean, the wealth creation in this country since COVID has been absolutely extraordinary. The S&P up the way it is, everything. The amount of liquidity out there right now is, and with SpaceX, OpenAI, and the other, all these companies, assuming they're going public, you're going to see another, 5,000 to 6,000 centimillionaires and probably 500 to 1,000 billionaires just coming out of those IPOs alone. So you're seeing this massive influx of real asset purchases, and I think private aviation's hitting the tailwinds of that in a big, big way.
A huge part of this model is the fractional ownership model, and you see really big companies dominate. FlexJet, which El Caterton now owns, NetJets, with Berkshire Hathaway owns. I know you say these services are commoditized, and you're trying to offer something different. What is the issue with a FlexJet or one of these companies?
Yeah, well, I think first is to sort of like hit the nail on the head. What Bond is a fractional private aviation member club, right? And it's which we think it's focused on the premium flyer, which we think has been tremendously underserved through the commoditization of that. But what we're really solving for is the fact that the industry has scaled tremendously. It's extraordinarily profitable, especially in the fractional space. In fact, it's really the only part of the industry that has made, at this point, NetJets is probably the most valuable airline in the world, private or commercial. You're talking about billions of dollars of EBITDA, right? So from that standpoint, the model works. But it's become highly impersonalized, right? Because they've scaled, they've introduced new products. 75% of all the flying at these incumbents is light and mid-sized planes, which is really serving mass demand, but it's also extraordinary taxing on people, pilots, and the overall platform, thus creating a dilutive process of service. So we're looking to change that.
Sorry, why is it taxing? What about it is?
So a light and mid-sized jet flies 1 hour per flight on average, right? Versus where we're focused in the super mid to ultra long range, the average is 4 hours. So imagine flying a plane 5 cycles a day, pilots up and down, and the people behind the scenes are constantly doing trip sheets and operations. That is it becomes highly dilutive of how everyone's working together. So ultimately, in that premium segment, you're looking at longer stage lengths, less flights per day. It's a little calmer, and I think they focused on 20 clients per plane through multiple products, where we're focused just on 10, right? So I think from that standpoint, having a little slack in the system has helped.
And you obviously have faith, given the Bombardier commitment. Just got a minute here, but what are your clients saying about higher oil prices, higher jet fuel prices? Are they reacting to that in a negative way, or is the tailwind, as you say, of these markets, muting that?
Good question. So I think the fuel, I don't think is affecting it much. Maybe someone takes one less flight personally, but for professionally, they're still going to go buy the company they're trying to buy. We've seen this before. I've been in the industry 22 years. I think at one point I saw fuel be almost 3 times what it is today, and people have gone through it. But I think it's I wouldn't say it's insulated 100%, but it's certainly not stopping the flying right now.
It's a fascinating company, a fascinating industry. Bill, thank you so much for joining us. Bill Papariella there from Bond. Let's get a check of what's going on in markets as we head to the top of the hour right now. S&P 500 at 74.20, so up 0.3% at an all-new record high. NASDAQ also at 29,300, getting closer to a record high, with yields rising 4 basis points, but still only just shy of 440, and Brent crude up 2.5%, but still less than 104 at 103.82. Coming tomorrow, JP Morgan Chairman and CEO Jamie Dimon on the program, plus Kristen Bitterly of Citi, Paisley Nardini of Simplify, and the founder of Cheniere Energy. This is Bloomberg Open Interest.